All right, how we doing, everybody? All right, mic check and screen check. Can you hear me clearly and see me? Perfect. Hey, Lauren, how you doing? Kevin, what's up? JR, see you in here, brother. All right, welcome everybody. This is Steve Morrow, Beat the Market Maker. It is Wednesday, October 19th, 2022. This is our session. Let's get right into it. Okay, running out of time, man. Year's almost over. We are in the fourth quarter with the first 30 days almost behind us. We're at 19th. Today, it started October 1st. Today's the 19th. So you're minus 19. You got 75 days left until New Year's Eve. And you know all these are not working days. So let's take a look. All right, we are right here. Let me grab my pen. All right, we're sitting right here. Okay, done, done, halfway done. Okay, so this is going to be 1, 2, 3, and 4 week bites. But we got Thanksgiving in here this week shot for most people. And then we're probably going to wrap it up probably somewhere around here. We're going to call it the week leading into Christmas, the week of New Year's, and we'll get back sometime January, a couple days in, maybe the 5th or something like that. I think that's going to be my first session, but we'll work out the details, keep you guys posted. So that's it. That's what you're looking at for the whole year. 2022 is almost behind you. You got to check yourself, man. Where are you at? It's time. Where are you right now? You're sitting here in time. Where are you in production and what you wanted to get out of this year? Okay, this is where the 12-week year really becomes reality for most people because you're literally looking at about 8 weeks left. All right, what do you got? We're sitting on a 12-week cycle, -1, right? There's 2 down. So that's 12, take away 3. Then we're going to end it here. You're looking at 8 or 9 weeks left, depending on your production during these 2 weeks. And for most people, you got kids and they're home from school. You ain't doing shit, man. Don't bullshit yourself. You need to spend time with your family. That's part of life. That's the whole reason you're even here. So this is where you are. Check yourself. Get some production going. All right. We know this 12-week year stuff. Say it 100 times. Today's 101. Start mapping out what you're going to do with the rest of the time and make some projections going into 2023. That's it. That's how you plan. All right. So say it again. Map out some possibilities for the remainder of the year. What can you do? Momentum into 2023. What's your ideas? What's your goals? Do you have a signature trade yet? Right? How many working days we got left? I just went over. What's your plan? Why are you here? Okay. The answer to make money is not good enough, man. You got to have some motivation behind it. What's your plan for next year? Do you want to qualify? You want to manage some money? Do you want to triple your own account? These are the things you have to decide for yourself. You have to decide what your goal is, right? And listen, you know how I am. I'm slow on the uptake with this stuff. I'm skeptical of all this bullshit, but it's legit, man. There's guys in the group making money, period. That's all you need. Proof of concept. There's guys pulling checks out of these companies. If you notice, these companies are starting to pop up, but listen, the word on the street is FTMO is paying. We have proof in the group. That's all you need. That's where you go right now. There's other stuff out there. There's a couple other people that are in some other things, and they're relatively new. I'm waiting for them to get checks, and we'll talk about it after the holidays. But right now, all you need is to qualify at FTMO. I don't care if it's a $25,000 or $50,000 account. If you have $3,000 or $4,000, you spend the money qualifying. But don't be like, oh, Steve, you told me to spend my money. Now I'm broke. No, you need to demo it. I'm pretty sure they give you a free demo to try and qualify by their rules. Okay, so that's what you need to do. You need to qualify under what they are offering. It should give you some self-discipline and help you from blowing yourself up. All right, and then what point do you call it for the year, and then you come back refreshed right after the new year? That's what you got to figure out. Where are you at? All right, this guy's worth mentioning again. I mentioned him last week. So anyway, hold on a second. Just so you know, I had COVID last week, man, and that was the reason for the recording. I'm coming around, but I got some weird dry cough thing going on. So if I mute periodically, I'm grabbing something to drink, trying to keep myself hydrated. But I'm fine, man. Whatever the 97th variant of this bullshit, but it's life. That's the confines, right? That's what we're working in. That's the environment we're working in right now. Just got to deal with it. Try not to get too sick when it hits you. All right. Let me get into some stuff. I want to talk about this impulse thing, man. I didn't mean to. I basically started a shitstorm with this thing, so I'm going to talk about it today, what it is, and some type of like trade mapping to give you an idea of what you're doing and where you're at, what you're supposed to be looking for. All right, so that's kind of what we're going to cover tonight, but I want to start and bust your chops with a little pop quiz. I'll give you a minute. Mark this thing up for me, man. You ready? Go. All right, you got it? What'd you get? Too soon? Okay. This is the exact stuff I've been talking about for weeks, and it's right in your face. Okay, what's this line right here? Anybody? 50 EMA or VWAP, volume weighted average price, right? Okay, this is basically a 50 bounce trade in GBP. Okay, so here's your first touch. See the liquidity levels, how they're here, and they pull them, and then they eat through them right there, and they spike it. Okay, so where's the trade? There's 2 or 3 opportunities here, right? Everything in boxes. Think of everything in boxes. When you start seeing these lines on the liquidity book, this is what made me do it. This is how I came up with drawing this as boxes. You start looking at this stuff. Look at this box in here. Draw it out into the future, right? There's the top, bottom. That means all this in here is absorbed. Absorption, right? There's your V pattern. Finger roll. Look at this liquidity right here and this liquidity right here. There's a box. Draw it out into the future. Okay, here's 3 entries here. This one is the best, and this one is pretty damn good. They're all successful. All right, so what are you staring at? An M formation. Failed buy side auction. Price is forced down. You get a pullback into the level. You could sell here. You could sell here. You could sell here. And you could sell here, which would be here. Sorry. Okay, how do you know price is going to continue? Anybody? You never know 100%, but what's stacking it in your favor? Okay, we know the trend is down. Moving averages are pointing down. That's an easy one. That's a lay down, right? Okay, so our bias is to the downside. We have these quick moves into the high. False move is fast. We get an accumulation phase at the top side of the book. Accumulation at the top side of the book, shift, right? Here's another entry, by the way. Then what? When the level takes out the previous book level, then the directional bias is confirmed to still be short. When the level takes out the level, it's short. When the level takes out the level, it's short. When the level takes out the level, it's short. When the level fails to get taken out, it's a pullback or a turn. Every time the level closes below the previous level, this liquidity disappears. See it? Absorbed, black on this side. Comes in, a hole in the book, they put it back to block. Anytime you see a turn bar or a turning point in the market, you can draw a zone on the candle formation. Okay, what do I mean? If you get a pin, a body, a lower body with a pin over here, then you could take these and aggregate them and create your zone. This book, this shit right here, makes the candle formation in the shape. So do you need the book to understand what's going on? One more time, Steve. No, don't buy this shit. It's very complex and a pain in the ass and will drain your learning curve. It will totally distract you. What you need to know is that these lines are creating the body patterns, right? These heavy blocks, go look at this on the chart. It looks like this. This is a rejection and there's a body. This is a rejection, a cap right there. There's a body, right? These small little pieces are called capping, where they throw the liquidity in the book, turn bar, goes away. Turn bar, they leave it in there. They had something they had to do. They had to get rid of these orders. But all you need to know is that the formations are the formations, and they're solid, right? This is the perfect flip, and this is a pretty damn good flip too, right? This is the huge structure, and this is a microstructure of the same thing, and your entry would be right there. You have flip, this closes below this and absorbs all this liquidity in the book. See it? Turns black, and there's a turn bar right there. When it turns, it makes that V pattern, right? Black, and then it's capped right here, absorbed and turned. You need the dealers are dealing from there. You need to deal from there. When I move, you move. Where they deal, you deal. With 99.9% conviction, just get in there. Is it going to be right every time? No, you're not going to be right every time. Why? Because there's variations. They could go in here to this level and they're like, okay, we needed 20 million bucks. We only got 15. Raise price a little higher and get these suckers, traders, to bite long. Okay, so this is your zone. See it? How the liquidity creates the zone? That's where I'm drawing this shit from. I'm not pulling it out of my ass, by the way. See it? That's all you're looking for, right? Here's the apex nadir thing. Stretch that out into the future. Look at this liquidity, straight out. Price goes down, pulls back. So what is this? This would set up on like a 5-minute chart. This might be the 15 or the 1 hour. Higher time frames make the pullback and the flip too. And it's literally right off the apex nadir and these bars right here. You could draw this whole thing out into the future where it turned. Stretch it out, right? This is a turn. Stretch it out. Draw the liquidity. Use the pins and aggregate the body closes. It's based on body closes at the turn, right? So how do you come up with an aggregate? Right? There's the turn bar. There's the turn bar. There's the turn bar, right? These are turn bars. You see the higher closes right here? And see the lower closes? You would take this and this. See how the liquidity prints? Okay, so this would be your low swing, right? Turn bar, turn bar, turn bar. Turn bar here, and you would stretch this out. You know I can't draw straight with a mouse. That's how you get the levels. That's how the levels are formed. Turn bar, little body right here, little piece right here. You aggregate these pieces, the wicks and the body closes, and you stretch it out. That's how you get your set. And that's you're looking for your zone. Okay, So safety trade, here's your M formation, here's your push, there's your intraday safety trade on a 1 minute, 5 minute, 15. Right? Because why? You have anchor, push one, shift in the zone, pull back, right? Look at all this black data, right? All this blocked order. Look, this is the stuff we've been talking about for years. Once they get all this accumulated, look at all that orange in the book. All this whole block is now trapped. They're going to trade below this area, right? Blocked volume. They did their work here, man. They induced long. Look, longs. Why such a big red bubble, Steve, in a downtrend? Because it's the opposite of what you would think it is. Retail traders are buying, they're selling. This is the dealer side of the book. This is what the dealers see. A big huge sell number. They're running stops on buyers. And buyers are buying into this liquidity. They're either getting stops from this, right? Boom, boom, down. Oh, man, they're consolidating lower. That's the anticipated move from retailers. Trigger the stops. Run them out. See it? Now you got a huge M formation right on the 50 EMA. That's your 50 bounce trade sell side. Nice little run. All right, so I don't know if he's here tonight, but I'm not going to call him by name anyway. I get the emails quite often where people just tell me they're stuck. Okay, so what do you do for being stuck? How do you get unstuck? And you know, it's like use the one method, one thing at a time. And I know it seems crazy because you got 3 instructors throwing stuff at you all week. I understand. But you got to figure out how to move forward in this business. They're running out of time for the year, and you got a whole brand new year in front of you. What is going to make 2023 different in 2022? What are you going to do? Just one thing at a time, man. Pick one task, one drill, one pair, one setup. Okay? You can have multiple setups in your arsenal. You can have a continuation, but they can be variations of the same thing. That's what I've been doing for years and didn't realize until we started talking about it, right? You could sell the M formation, you can sell the flip, and then you can sell the continuation of flips all throughout the day. That's one trade. But this would be an M formation. This would be a intraday safety. This would be a level 2 push, whatever you want to call it. But it's one thing. It's one setup that I've gotten really good at, and I just execute it multiple times during the day. That makes sense? Right? If you got your M, you get your first impulse, your push one, right? Then you expect a pullback and you get a micro M off of here, right? It could be off of here, or it could just be independent of itself, a little bit lower. So this is a trade. This is a trade. And then if I want to run it down, one more shot at it, take another stab at it. The key is to get the direction right. What's the pointers for the direction? Moving averages, anchor, zone, flip, push. Anchor, find the zone, wait for the push, retest into it, sell it, buy it, wherever you are in the cycle. You just need one thing that you can get working for yourself, right? I don't know if you're here, bro. This is for you. One task at a time, one drill at a time, one pair at a time. All right, where are you in the high-low drill? You should be about wrapped with that, and it should have made a difference for you. A lot of people don't want to do the drills, right? But you've been here a long time and you did it, and I hopefully it was eye-opening. I got a lot of emails recently that I finally convinced a handful of people to do it, and they've done it, and they're like, well, I don't know what the hell my problem was. I don't know why I waited so long. I read you that email last week that somebody's been here for years, never did it. They did it, like, well, damn, they should have done it 5 years ago. You can't get that time back, but you could accelerate your curve forward. That's what you need to do. That's the plan. All right. Let's talk about some trade metrics. This is the problem. is people write me and they want to trade Asia. Okay, no problem. Trade Asia. But you got to temper your expectations. Where are you? What time of day is it? You got to know your place in this world. And I don't mean the world, the globe. I mean the world of Forex, the exchanges. You got to know where you are, man. How come I can't get 1,000 pips out of Asia? Okay, because Asia's an accumulation phase for most majors. Are there pairs that move a lot during Asia? Yeah, you could trade yen crosses. You could trade Australian, New Zealand, and yen. Those are pairs that are typically their exchanges open during the time. You got to know your place. Where are you? You want to trade Asia? Then temper your expectations to maybe 15, 20 pips based on what pair you're looking at. GBP moves a little bit. GJ certainly moves, and EJ certainly moves. I want to trade London. What should I do? Same. You want to trade US? What should you do? Same. Know where you are in the cycle. Know what's going on. Right? Asia is an accumulation phase of the business. It's limited by the range of the blue box, roughly around 50 pips. Has it been more volatile lately? Yes. So you want 75 pips on a 50 pip range, and you get pissed off at me that you can't get it. And you're not going to get the exact top swing or the bottom swing. That's just life. So you have to know where you are. If you come and the box is 50 pips and you're here, right, middle of the box, what's your expectation? The low swing, 20, 25 pips should be available to you, right? Because you're going to have this. So you show up over here at 10, 11 o'clock at night Eastern time, and you want to know why you can't get 5,000 pips. That's why. Because you're in a 50 pip range. You're fishing in a shallow pond. Right? The end of the box to the first shadow. That's a little better picking. Okay, gap one. Usually false against the trend. It's a straightaway day, right? You got to know where you are. Gap two, right? London Open, this box right here. What happens there? Stop hunt, high of the day, low of the day forms, Brinks trade, anchor points. That could be where your M or W is going to form. What happens middle of London? What's London mid-session? Lunchtime, man. You think they don't eat over on that side of the world? Okay, so what happens? Going into about 6, 7 o'clock hour, and the time's going to change because we're going to move the clock in a couple weeks. You get a nice trade on, and you look at the clock, and you're like, damn it, it's 6, 7 o'clock, sideways. Your trade is up 5 pips, 2 pips, 7 pips, 2 pips, back and forth. You're getting frustrated because you're not realizing where you are in the world, where you are in your part of the cycle. And that's creating a lot of frustration for people, and I'm hearing about it. Right? The markets are crazy. Everyone's talking about there's a lot of people having success, and they're like, oh man, I caught this. I caught 5 million pips yesterday. Okay. And then you get on a trade at lunchtime in London, and it chops, and you can't get 5, 7, 8. You scratch out, and then it finally moves again. This is trade metrics. This is the stuff you need to know and apply to your pair so you can temper your expectations. All right, what happens in gap 3? USA takes over, cash open, influx of volatility, hit the stops or continuation depending on where you are. They usually come on and swing stops in both directions. If you're looking at a USA instrument like ES or gold, right, NQ, those things, those get very volatile at the open. So what should you do in those instances? Let them calm down. Wait for the 9:30, 10 o'clock. Use the gap box, right? Use the box to create some levels to lean on, and then go from there, right? They call it opening drive or ORT, opening range trade. That's a trade. Box that in, draw your lines like Bookmap, and then look for an entry. All right, what happens around lunchtime? USA's got to eat too, right? It goes into consolidation, but usually you get your reversal for the end of the day in the currencies. Are there good moves in the USA? Of course. But typically, they calm down 12, 1 o'clock. And when the clock moves, that'll adjust. All right. Somebody wrote me an email, and I didn't post it, but it was basically that when he does his mapping and his trades and he does bar by bar, it messes up his rhythm and his timing. And he says that it creates a level of impatience for him. And I was like, I understand that. It makes sense because when you click bar by bar, it's like, I don't know, the way society is now, instant gratification. You either know if it's a winner or a loser in 2 or 3 clicks. But then when you put the trade on in real time, you lose patience and maybe you click out, you start seeing things, start imagining things. There's a couple ways to handle that. Do live demo trading in the real market conditions, right? That's the easiest way to fix it. And don't do a lot of drills in bar by bar. Have your setup mapped out and then take it in real time in demo. That's the best way to get your sea legs. But you have to do some drills and you have to get some ideas of where you're at before you can start doing that. But I agree with this person that it does create that. Put your trade on and walk away and check it put a 14-minute timer on your watch, and the minute you execute, start it. Come back between 15-minute bars. You remember that you're supposed to be trading on 15 as your guide, right? That's the lowest time frame. You can enter on a 1 or a 5-minute chart. This is your trigger. This is your monitor. All right, if you're trading intraday, right, 1 hour's direction, 15-minute, the close is now, not the bar. What it has to close. How does it close? Man, you can get all kinds of craziness in a bar, right? It can throw these big, huge pins, and then with the last 2 or 3 minutes to go, it ends up being a full sell side bar or buy side bar. Don't get caught up in the tick by tick. The patterns hold true no matter what. All right, so first thing, chart location, time horizon. Okay, you show up at 5 o'clock in the afternoon from work and you want something. Okay, that's fine, but know where you are. Okay, if your 5 o'clock happens to be London Open, then you got a better chance of somebody that lives in the USA and shows up at gap time, settlement time. Okay, opening price, you want to lean on that in the Asian range. Okay, you're on to something. You have to know where you are, and this is a big part of this. This is the business right here. All right, next. How do you figure out take profits, where you should get in, where you should deal? Right? So to understand the metrics, right, if you're going to use your formations, you need to know the distance on average that this creates, top to bottom. Is this 50 pips structure? Is it 25 pip structure? It's different for every pair, but it's around 50 pips. What's the line in your sand? Your sand, not my sand, your sand. What's the line in the sand for you to where you want to execute? Trade location. You have to have the patience to wait for it to develop, right? A lot of times you'll get this big shift bar and it creates that FOMO, right? You're going to miss it, and then you get in right here and they snatch it back like they were going to do anyway. Remember, when they flip the zone, they close below and pull back. Is that 100% rule? No, there's no such thing as 100% rule in the business. But you got to find out where your line in the sand is for where the trade is pullable, executable, whatever the right word is. What you want to do is locate the last place the opposing dealer had control of the book. Where would that be? Okay. If you're thinking sell from pattern and levels, where's the last place the opposing dealer, the buy side dealer, had control of the book. That's right here at the apex. He creates the turn bar by pushing money into the book, absorbing the sellers, and forcing price back to the top. Then you have a decision point here. Price works its way back to the top. Now, does the dealer spike the level and come back below, or does he close above? If he closes above, you have to wait and see if he continues to pull back to higher price, or if he spikes it in a couple of bars and then comes back into the range. If the dealer, right, this would be your 2 box levels or orange stripes in the book. What's the distance in here? About 50 pips, okay? Now, if the dealer comes in, shifts the zone below and traps, then you're looking for, treat this as an AR range, right? This would be your zeros, 50, and zeros. Now you're looking for a micro M structure in here. You know that when the dealer closes below here, he absorbed the buy side of the book. He wiped out the buy side dealer. Sell side owns the book. If he closes above here, sell side got wiped or absorbed. Buy side owns the book. If he comes above, forms the anchor, and crosses the entire plane, sell side took the book back. Now you're looking for a microstructure sell, a baby 1-2 or a baby A-frame. That's it. Simple. Where's your line in the sand? Here and here. Now, what can you lean on inside of here? Depends on where this is formed. You might have the blue tracer coming right through here, right? Yesterday's high or low. You could have a couple of days tracers in here, previous day's tracer. It's a pretty good place to lean, man. Last night, London, they were playing with the blue tracer, right? The book was sell side, downside book, downside bias, but they were toying with the buy side. They were playing with the tracer, bouncing off. They pulled back a little bit, acted like they were going to go higher, consolidated, right? And then they made their move anyway. Inducement, trap, punish. You just have to understand what you're looking at, right? There were some quick moves into the lows, pull back, consolidated, went up, and then just took it all out anyway. I'm sure you guys were there. You have to remember that you are not a retail trader. You're trading like a market maker. So you want to enter on the side of who has control of the book. You draw the levels and you wait for it to flip and you try to understand where you are. If you're not looking at it like that, which is looking at it from the feeding side of the screen, what are you feeding to the retail traders, right? Or dare I say, what bullshit are you feeding to the retail traders? That's what you got to look at. What's the story? Create a storyline, a narrative. Man, there's so many different things you can call it. The background. What's the background? Background is induce lower level shorts, shift the zone away, induce higher level, absorb stops, reverse the pattern, head to the downside. That's how you have to look at it. You come up to the screen, who has control of the book? Where's the last place there was a turn bar? Okay, I see my Asian range. I see 3 swipes at the high. I see a flat print on the top. I also noticed they did the same shit yesterday. How do I know? There's a blue tracer right in the same zone. Blue tracer comes across. I'm looking at a possible double top sell side because the whole freaking economy's down. GBP is gaining strength. All the other majors are gaining strength or weakening against the dollar. So that's what I'm looking for. Right? The narrative, build a storyline. What's going on in the world? The world's pretty messed up. I don't want to fall prey to this stuff, but overall, the dollar's gaining ground on these other major crosses. So long term, trend is down. Okay, is there going to be massive pullbacks in between? Absolutely. So how do I find my spot, my trade location in this business? By not acting like a retail trader. A moving average crossover don't mean shit unless you give it some context. It's just a couple of lines that crossed. Can you lean on it? Can you add it with a tracer and a pattern? Yes. But by itself, in and of itself, it means nothing, especially on a 1 or a 5 minute chart. Even on a 15, it's not that strong. We use the 1 hour crossover. We use days, time and price, right? I'm not talking about minute by minute. I'm talking about what's happened over the last few days. How many days has it been? Are we expecting a reversal, pullback against the prevailing trend? That would be the weekly low or the weekly high. We would look for some type of A frame or M frame or V frame or W frame. Hold on a second. Sorry, man. I'm still congested from this bullshit. Anyway, you got to get the context of where you are, and you got to do it, practice it, and learn it. That's the only way, man. The thing is that everybody comes in, they throw money at me, and they want to trade. I get it. I understand. But if you don't do the drills and you don't get a context or a background of what's going on, you're going to struggle in the business. You have to do the background work. That's all there is to it. There's no other way. And you have to look at it from the right perspective. You have to look at it from their side, the back end of the screen. What are they feeding to the traders? What does it look like? You can't get worked up over a spike candle or a pin because it usually ends up being a false move, right? It's metrics. It's all the stuff that you can't account for. Okay. Qualifying questions. Where's the last place the dealer blocked out the level, rejected the level? I just drew for you on Bookmap, right? This was all blocked. This is the high side block, right? This is a huge, massive double M formation. Tapped into the volume weighted price. And then there's, right, this could technically be what? 22? Second leg of a second leg? Or 12? Right, this is the whole structure. And this is a really good entry off the floor. But if you're looking for smaller, faster time frame entries to grab your piece of the float, right, then you could take a measured move. Right, you would take this impulse from here to here, and you would measure it from here to here. And you're going to get the distance in pips of the rough target before you get the turn bar. Symmetrical. Markets are symmetrical, man. All right. Where's the turn bar? Why is a turn bar a big deal? Because the pattern to turn, railroad tracks, or evening stars, morning stars, right? It takes liquidity in the book to stop a price dead and create the turn. The only one that could be doing that is the dealers, market makers. Nobody else is doing that shit. Retail traders ain't turning the bar. So a turn bar has value, a turning point, turn spot, whatever you want to call it. There's value in those spots. So that's where you get the idea to draw the zones on the turn bars. Turn bar. Look at all that liquidity. Turn bar. This is all part of the same puzzle, right? Look at this heavy orange turn bar. Flip. Back into the same liquidity. Okay? Makes sense? I hope this is making sense for you guys. But this is the stuff that's going to make or break you as a trader going forward. Okay, right? We know the apex nadir formation, trapped or blocked. I just showed it to you. And then there's variations. There's flat print, single prints, right? Single print goes up. News releases, whatever the excuse is, man, to run that thing up there and reject it. Variations on the theme. You got to understand what they're capable of doing. Is it always going to be a perfect M or W? No. You just have to recognize the variations. Okay, if you have all the other structure in place and it does what it's supposed to do, right? You got something over here. You got this thing boxed out. It does this. And then all of a sudden they come in there and do that. And you're sitting there going, oh, I don't know. I didn't get it. Okay. Then you take a hard pass. You don't chase it. Or you have enough sense to realize that I've been looking at this stuff forever. That's a 12 setup. And I'm looking for some kind of rejection in this area. Okay, you could take it here. If you take it early, then you got to realize they could come back for a second swipe for higher time frames. 15-minute, 1 hour could get a second pass, and you can't scratch yourself out when you're right. And listen, this shit happens to me too, man. I'm human, but I've been doing this a long time. Get right back in. You understand? There's a lot of people write me emails, say they had the idea, had it picked out perfect, and they got shook out, stopped too tight, whatever the reason. You got to get through that. And that comes from working, spending time in front of it. All right, let's see. Where are we? All right, I'm running out of time. Part of developing your patience is understanding time in, time out. So if you're testing or back testing, okay, we used to listen. I was on the fire department. They kept crazy records about time the call came in, dispatch, time. Okay, time goes to 911. 911 takes it. They give it to the fire station. They tone us out or drop the call on you. That's time stamped. You get on the engine. You say responding. That's time stamped. You arrive on scene. That's time stamped. First action. That's time stamped. Call for a second engine. That's time stamped. Okay, they time stamped everything I ever did in my life as a firefighter. So time stamp your trades. Time stamp your trades. You got in at 3:05. How long did it take for the trade to pay out? When you're going back and looking at stuff and you go bar by bar, you're like, wow, it took 3 minutes and I'm out. No, it didn't take 3 minutes. It took 3 15-minute bars. What does that equate? That's 45 minutes of time. So why are you getting pissed off when trade doesn't move in 3 minutes? Because when you click it, it takes like a minute to get through all this crap when you're doing it bar by bar. But in reality, it's 45 minutes of elapsed time. What time did the trade go off? What time would you have technically gotten out? Okay, that trade lasted 45 minutes. Why do you get mad when it doesn't go in 4 minutes? Because you're training yourself wrong. Mark time in and time out. What's the total time to target or stop in bars? And then calculate that into a clock time. How many retests of price and your patience were shown? Okay, you get an M formation and it goes like this. Then it finally goes. What is this time block? How long does that take? If you're looking at a 5-minute chart and there's 10 bars there, that's 50 minutes. 50 times 10 times 5 is 50 minutes. So that's almost an hour. You get these little inducements, right? Of pushing and pulling back and forth before the trade actually breaks. You got to know that. What's your expectation? Symmetry, impulse legs, measured move, right? We know that. I hate this stuff because it's retail, but A, B, and C, D are symmetrical. If this is 25 pips, then you could expect at least 25 pips on the second push, right? Just draw it, fill in the blank. Depends on how good your entry is. You need to worry about this part and then project your target down into here. If you're expecting 90 pips on a 25 pip move, you're sorely mistaken. Got to be realistic with yourself. And that's where the swing level stuff comes in. This will be the last topic, I guess, tonight. All right. Swing or impulse moves. Okay. Years ago, there was a girl. She's very successful and she moved on. April. She and I talked about doing the impulse levels. And she went through all the majors and she mapped it of what each level would generate in pips, total distance. And they're different on every time frame before you see a visible pullback. All right, so we're measuring distance and impulse legs on a 5-minute or 15-minute before a visible pullback is seen. Remember, you got little 3 pushes in each set of bars, right? So they're going to look different on a 5-minute than they would on a 15. This stuff gives you an expectation or an idea of what you can get out of each trade. If you're trading on a smaller time frame and you want to live on the 5-minute, then you need your major structure, your impulse, and what this value is. So Pick a couple of pairs, 1 or 2 is fine, or just 1 if you're starting out, and map those impulse swings on whatever chart you want to reside in. What do I mean? If you're going to trade on a 15-minute chart, but you're going to enter on a 5, then you want the 15-minute impulse, leg 1, leg 2, leg 3, level 1, level 2, level 3. You want those pushes of what they're capable of delivering before a major pullback, right? So if you get in right here and you get a nice push, what is this from top to bottom in pips? What's the reality of this? Right? So 0 being where you see the flip, and the exit being right before there's consolidation and pullback. This exact swing volume, what is this number? It's some number, right? It's based on ADR and it's based on little micro pullbacks depending on the chart. Make sense? That is what the swing level stuff is. You know that they're very symmetrical, and I just showed you how to measure them. Let me look, I got some questions. I don't agree with you, Mohammed. It's a pullback is a pullback. There should be no question. Okay, so I guess I got to read this out loud. The hard part is how to count them correctly and creating my own counting technique. Zone flip pushes 1, then it's finger roll on a 15-minute. You need to pick a chart that you're going to reside on and reside on that chart, period. Okay, you're mixing 2 time frames. That is difficult. It's making it harder for you. If you're trading a 15-minute chart, I've said this before, 1 hour is your guide, right? Last week, 1 hour is your guide. 15-minute is your intraday chart that you're monitoring. Then you'd want to drop down to a 5 for entry to get a tight entry. Get off of the 5 and you monitor the trade on the 15. That's it. You don't need all the charts open. That's what's messing you up, is you're looking at too much shit and it's confusing you. Does that make sense? You do this work on a 15 if that's where you're going to reside. Okay? And I'm not yelling at you. This is for everybody. You drop down to a 5. When you see something developing, okay, Steve, I want to trade a flip. 15-minute chart I'm looking at. I got my structure built out. I got my close above and pull back into the range. Now, here's my level. I'm going to take these turn bars right here. Last place the dealer, buy side had the book. Now sell side's got the book. He closed below. What do I want? Okay, let's say I got a railroad track, evening star, and then another railroad track going back up, and then I got another pin hammer. Okay, now what do I want to do? I want to take this body and I want to aggregate all these pieces and stretch it out into the future. Still on a 15-minute chart. All this is done on a 15. Now I'm going to drop down to a 5 and look for my trade over here. Okay, when the 5 comes in, I expect some type of pattern to be very similar, and I'm going to go in. You can use the 13 close below, retest, or you can just use the zone that you drew off the aggregate bodies. Price closes above here, decisively, you're in trouble, exit the trade or take your stop. If price goes in here and rejects leg 1, then you refine the entry. Remember I talked about refining the entry? This is how you refine the entry. Price enters your zone on leg 1, right, off of this whole structural thing. Now you look at these bars and you aggregate these bars, right? You're going to get a pin, you're going to get maybe an inverted hammer, you're going to get a push bar, and then now this is leg 1. Now you're going to take this information, and within the zone, let's say this is a 15 pip zone, you're going to turn it down or tone it down to about a 5 or 6 pip or 5 or 10 pip swing area. So now you're refining the entry even tighter, and then you're going to go in on a break back below this zone. So this might be a 15 or 20 pip zone, and you're going to basically cut it in half and refine the entry. I found on pound dollar that the back side of the zone works best. So if you're going to aggregate your entry with multiple orders, you'd start stacking your orders in here, stop above. If you're going to go all in, all out, then you want to cut this in half and go here to the back of the box. The problem is, okay, you're trading FTMO, you're trading larger size, you're going to have thin fills at the top of these because they should be wicks. So if you're trading 50 lots, maybe you go 10, 20, 20, or you go 10, 10, 20, 3 10s and a 20, whatever it takes. So when the price spikes up through there, remember they fill the cells, right? Remember they fill the cells in the candle? It's cross. You have the spread. Those are things that you got to work through. If you're trading size, you got to aggregate in because it gets thin, right? Remember candles are tapered. Remember how candles are tapered, right? Picture it like a kite. Heavy volume in the middle of the candle, point of control, VWAP in the bar, and then the orders start to taper off as you get to the wicks. And I'll cover that again for the new guys, but it's in one of my recordings from a while back. It's just market maker order flow stuff. Okay, so if you're dealing on the wick here, this is very thin pickings, and you're trying to get 50 off, you're not going to get them off, you're going to get left. But if you have a sell limit or a buy limit, you're in the queue ahead of everybody else. Limit orders get filled, market orders get handled as they appear on the book. All right, I got some more stuff, but let me wrap it here, man. My throat's killing me. Sorry if I was a little hoarse or raspy today. Hopefully I'll be better next week. All this rest of this congestion will be gone, and I'll get back to normal. Anyway, appreciate you guys. Send me questions, send me emails, but just try to map something out. You're running out of time, man. The year's almost up. Good night.